How's it going, everyone? Welcome back to my channel. Hope you guys are having an amazing day. Today I'm reviewing Coca-Cola stock, or KO, that's the ticker symbol. And this company has been around for a while. Since the IPO, it has just been going up consistently, and it's not a straight line up. Obviously there has been crashes like in the late 90s, also in the late 1980s as well, the 89 crash. So it's been going up though, overall, just staying ahead of inflation, because even in a debt crisis like what we're dealing with right now, when they're printing out so much money with stimulus and also unemployment, these companies that sell products that everyone wants worldwide, they end up rising in value above inflation. So you should be fine if you put your money into this. Now, I'm not an expert in stocks or in investing. I just read a lot of books and research. So I'm not a financial advisor, and this is not financial advice. Do your own due diligence before investing. I'm just giving you guys my own personal opinion, but I think this is a great company if you want to make some extra income yearly just from the dividends that this company pays. So a dividend is just a payout that you get either quarterly or yearly from holding the company stock, and it depends, the dividend yield. Like with this one, it's actually about 3% per year according to this Nasdaq.com website right here. It's telling you that's better than the 1.6% yield that you can expect from the average S&P 500 stock. And these are blue chip companies, right? Any company that lands into the S&P 500, like Tesla, for example, these are well-established companies, and not all of them are going to offer a dividend. Some stocks in the S&P 500, even though you'd imagine that because they're part of that group of stocks that are the best performing in the US, that they would offer some kind of dividend. Not all of them are going to. Just like with Tesla doesn't offer any dividends for owning or holding the stock, but Apple does. They do offer a dividend. It's not the best, but it's decent. It's just a bonus for holding that stock, which is going to go up a lot just over time, because they're tech stocks, including Alphabet. Like Alphabet, these are good companies to own in general, even without the bonus of them offering a dividend. So the fact that you're owning a long-term company that will just, that'll go up in value based on population growth and expansion, and just as the world, becomes basically more filled with people. Like there's gonna be more demand for these products, like Minute Maid, Dasani, all these products, bottled water. That's going to be very expensive in the future because of just a water and food shortage. Situations like that will just cause food to be more valuable in the future, in my opinion. So owning these stocks is it's important, I feel, long term, because people are never going to stop eating. They're never going to stop drinking soda. You'd imagine, ideally you'd want a world where people are eating healthy, they're not eating fast food or products like Coca-Cola because of all the sugar and ingredients. But this is not a perfect world, so people are going to eat what they want, and they have free will to do whatever they want, and you have to respect that. So my prediction is that as time goes by, people will continue to consume Coca-Cola products. So that will help you if you're owning and holding the stock long term. This is non-stop money. You're not going to get rich overnight. You're not going to get rich quickly, but you'll get rich over time, because you're holding something that will go up in value beyond inflation due to just based on the value that it provides as a company to the world for selling these products to a growing population, and also because the dividend that it offers. I mean, supply and demand, people are going to want to buy this stock just for the dividends. I mean, when people cash out on crypto and other assets, they're going to try to put their money into safe companies like Tesla, and to also like Coca-Cola, which you expect in the future to keep going up because of demand and because of the product that they offer and adoption. So yeah, that's just my opinion on why people usually choose these companies over others. They want to put their money into something safe. That's the case with Berkshire Hathaway, and Warren Buffett loves this company. So Buffett appreciates the durability of the company's core product, which has remained virtually unchanged over time, with the exception of the ill-fated new Coke formula rebranding in the mid-1980s. This makes sense given that Buffett started buying Coca-Cola shares in the late 1980s. He was buying early, right after the market crash of 1987. So as of September 23rd, 2020, with 400 million shares valued at approximately $19.2 billion, Coca-Cola accounts for 8.6% of the Berkshire Hathaway portfolio. That's impressive right there. They own, out of all their holdings, almost 10% is Coca-Cola. So that should tell you something about this company long term. If this company wasn't worth holding long term, they would have already sold, just due to the opportunity cost that they were giving up from holding this company if it was detrimental to their portfolio. But because it wasn't detrimental to their portfolio, and it hasn't been, it's been working for them owning this many shares and getting a kickback of 3% every single year from dividend yields is something that they don't want to give up. They own 400 million shares. Imagine that. Do you think they're going to give up their position in their 10%, almost 10% position in Coca-Cola just for what? To buy something that they don't really understand, like new tech stocks? They'd rather hold something that they know works and something that's been paying them. They're focusing on what's making the money, and this buying these companies that provide a safe dividend that will continue for years to come. Here's a little graphic from 2017, so it's old but not really, and it's showcasing how much revenue they've actually generated in that year. So this is obviously different now in 2021. It could have actually risen due to the pandemic. More people are buying food than ever because they need to stock up on these items, like especially like bottled water and beers. A lot of people were buying beers during the beginning of the pandemic. So companies like PepsiCo and their subsidiaries, like they were bringing in $63 billion in that year alone in 2017. But they also offer a variety of products. So they don't just offer beverages, they offer snacks like Doritos, Cheetos, and Quaker products, Lay's, and they sell 7-Up, of course, Pepsi, Gatorade, Coca-Cola, and their subsidiaries. They brought in $35 billion in that year. So but Coca-Cola owns Dasani, Simply Beverages, Minute Maid, Smart Water, Vitamin Water, a lot of water products, Powerade, Fuse Tea, Sprite. So these are name brands that, especially with Fanta, that one is very popular in countries like India and also in South America. I think that just with this growing economy and also population, these companies will grow in value as well, just over time. And that's why I think they're safe investments, in my opinion. I don't know what you guys think, but that's my own personal opinion, really. This other graphic that I want to show you guys has to do with fast food restaurants, so Coca-Cola versus Pepsi, because each of these fast food restaurants, they have their own preference when it comes to these beverage companies. Like with McDonald's, Subway, and Burger King, they feature Coke products. With Pepsi, they feature their products in Taco Bell, Pizza Hut, KFC. What's concerning me is that a lot of Pizza Huts are starting to disappear due to the lockdowns and all that, and just a lot of stuff that's been happening just recently, and that's actually concerning me. But McDonald's, Burger King, I don't know about your area specifically where you live at, but I haven't seen any of these closed down recently. These are the more popular restaurants, and Coca-Cola seems to be featured in the most popular, restaurants that I've seen, fast food related. So Taco Bell is an exception. Obviously, Taco Bell has their Pepsi partnership right there in place, so that's one of the more popular restaurants out of all of these, to be honest, as well. But yeah, this is actually good for us holders, because every time a customer goes in there and buys a Coke or Pepsi product, I mean, if you're holding the stock, the underlying stock, you're gonna benefit from every purchase, by getting a small fraction or portion of the profits from the company. You're gonna get that through dividends or just the stock price gaining in value. So yeah, that's all I wanted to mention in this video. Really, there's some more like current event news, like where Coke to move Texas-based Minute Maid to Atlanta. So that's some stuff that has just recently happened. Also Coca-Cola staff told an online training seminar to try to be less white. So that's some of the more controversial things that I've seen related to Coca-Cola recently. But other than that, I think this is a safe investment. I don't know what you guys think. Let me know your opinion though in the comments. Hope you all enjoyed this video and got some value from it. Definitely leave a like and comment on it if you did. And I'll see y'all on the next one. Peace out.